Good morning, everyone. I'm excited to welcome you to today's presentation. We'll be exploring how talent wars are shifting from consulting firms to trading firms and what this means for industry stakeholders. This is the first of 10 slides, and it sets the stage for an insightful discussion. We'll look at the perspectives of faculty, students, and industry players and understand why this news is a must-learn for all. We'll also touch on recent trends like the dominance of trading and investment platforms in campus placements. So, let's dive in and see what's driving these changes in the industry landscape. Let's take a closer look at the current landscape. Quant trading, algo trading, and risk analysis are really taking center stage across the industry. These areas are now dominating the scene, driving innovation and profitability. When we compare trading firms to other sectors like consulting, banking, FMCG, and tech, it's clear that trading firms are outperforming them in terms of talent and influence. This shift has also impacted compensation, with top salaries from these trading firms crossing historic highs, with some reaching over 2.8 crore CTC. So, in this context, understanding these trends is crucial, as they highlight where the most exciting opportunities and competition are emerging in the financial world today. Skills scarcity truly commands a premium in the market today. Global firms are expanding their presence, seeking out the best talent regardless of where it's located. What's interesting is that they're often looking for a low-cost, high-talent workforce, and this is where India really has an advantage. Trading profits in this industry tend to justify high compensation to companies, or CTCs, because the value generated by skilled traders is significant. We're also seeing many MBA graduates being trained specifically in analytics, which is essential for making data-driven trading decisions. However, there's a short supply of quantitative talent, people who can handle complex models and algorithms, so this skill set is highly sought after. Ultimately, this industry is high-profit and skill-driven, which explains why market dynamics favor trading firms. So, when we ask why trading firms dominate, it comes down to these factors: their ability to leverage skilled talent, the profitability they generate, and how they adapt to market demands for advanced analytical skills. All of this ties back to the overall theme of how talent and market forces shape the industry's landscape today. Let's take a closer look at some of the critical skills and concepts that are essential in this field. First, behavioral finance plays a significant role, especially when it comes to high-pressure judgment. Understanding how emotions and biases influence decision-making can be the difference between success and failure. Managing risk effectively is also crucial, as it helps us navigate uncertainties and protect our investments or strategies. Moving on to decision-making, having strong technical skills is a must. Proficiency in programming languages like Python, R, and C++ is often essential because they allow us to analyze data, automate processes, and build models efficiently. These skills enable us to develop sophisticated financial models and make more informed decisions. Additionally, a solid foundation in advanced mathematics, statistics, and predictive modeling is key. These quantitative skills form the core of modern finance, helping us forecast trends, measure risk, and optimize portfolios. Finally, I want to highlight that these skills are not just important for today, they are future-proof. As demand for quantitative expertise continues to grow, mastering these areas ensures you're well-positioned for ongoing success in this dynamic industry. On this slide, we're looking at some of the high-impact roles that demand exceptional performance and are often quite high stress. These positions are crucial in the financial industry because they directly influence trading outcomes and risk management. First, we have the trading plus coding hybrid expertise role, which is often called a market strategist. This position involves analyzing complex financial instruments, including derivatives, and developing strategies that can adapt to rapidly changing markets. It combines deep market knowledge with technical skills, making it a challenging but highly rewarding role. Next, the automated trading system developer, or algo trading associate, focuses on building and refining automated trading systems. This role requires a blend of programming skills and market insight to create algorithms that execute trades efficiently and effectively. Then we have the risk analyst, who specializes in portfolio risk assessment and mitigation. This position is about understanding potential vulnerabilities in portfolios and implementing strategies to minimize exposure, ensuring stability amid market fluctuations. Following that, the quant trader works on developing mathematical models for trading strategies. This role involves applying quantitative methods and data analysis to identify profitable trading opportunities and optimize decision-making. Finally, the overall theme here highlights the variety of high-impact roles offered in the industry, each demanding a unique set of skills, a high level of expertise, and the ability to perform under pressure. These roles are vital because they drive the success and resilience of financial operations in a fast-paced environment. Let's delve into some key insights about compensation in the trading world. As you can see, high rewards often come with high performance pressure. The final CTC, or total compensation, typically includes bonuses that are directly linked to trading profitability. When we look at salary ranges across global trading desks, the figures are quite impressive. For example, the typical range is around rupee 1.5 to 2 crore. But for top performers or in exceptional cases, the CTC packages can go even higher. Take Da Vinci Trading, for instance. They offer packages that can exceed 2.8 crore. This highlights how competitive and lucrative the environment can be for top talent. Ultimately, this slide underscores the connection between compensation and competition. The more competitive the environment, the higher the potential rewards, but also the greater the pressure to perform at your best. This balance is central to understanding the dynamics of trading careers and how they align with the overall theme of performance and reward. This slide highlights a classic example of talent clustering in action. You see, global firms really trust the quality of talent that originates from top institutions. This trusted pipeline is built through a culture of case competitions, which not only attracts bright minds, but also builds resilience and mental endurance among participants. It's a way of filtering out the top analytical minds effectively. What's impressive is how this rigorous selection process creates a strong pool of hybrid talent, blending expertise in technology and finance. And it's this combination that makes top institutions like IIMs the favorite hunting ground for firms. They recognize that these institutions produce candidates with a solid quantitative foundation, ready to tackle complex challenges. So, in essence, this clustering isn't accidental. It's a strategic ecosystem that continually feeds top talent into global firms, reinforcing the cycle of excellence and innovation. So, the key takeaway here is that MBA students need to adapt to analytics-first careers. As we look at the current landscape, there's a rising demand for computational finance courses, which reflects how important quantitative skills are becoming. Trading is increasingly seen as a dream job for quant MBAs, highlighting a shift toward more technical, data-driven roles. Meanwhile, traditional investment banking roles still offer stability, but the compensation, what we call CTC, has been relatively lower compared to these new opportunities. At the same time, packages in product management seem to be stagnating, which might push students to consider other paths. We're also seeing top talent in consulting moving towards trading roles, driven by the allure of more dynamic, high-impact work. This all points to a shifting landscape, where the skills and career preferences are evolving rapidly. And this shift definitely impacts placement trends, as companies and students adjust their expectations and strategies. Overall, it's clear that to stay competitive, MBA students must embrace analytics and technical skills, aligning their careers with these emerging opportunities. Let's talk about why capabilities matter more than just titles or labels. In today's fast-changing world, what you can do, the skills you bring to the table, really determines your success, often more than what your job title says. Skills over labels is a key idea here. When we look at high CTC roles, or roles with high compensation, they often come with high risk. That means being willing to take on challenges that might seem intimidating, but can lead to great rewards. So, understanding your risk appetite is crucial for stepping into these opportunities. Talent is no longer confined by borders. It creates global opportunities, and this is especially true for countries like India, which has a growing talent pool and a competitive edge. India's advantage lies in its ability to offer skilled professionals to the world. Many global firms now value results over just degrees. They want to see what you can deliver, the impact you make. Performance truly matters in today's job market. And for those of you interested in roles that pay the most, combining analytics, coding, and finance creates a winning trio. This powerful blend opens doors to some of the highest-paying opportunities out there. Finally, for MBA students, the key lessons are clear. Focus on building versatile capabilities, be willing to take risks, and develop a strong performance mindset. These are the elements that will help you succeed in a competitive global landscape. Now, let's turn our attention to some thought-provoking questions that really tie everything together. First up, what risks do traders face that justify these eye-catching salaries? Well, trading is inherently risky. Market volatility, rapid decision-making, and significant financial exposure are just a few factors. These high salaries are often seen as compensation for that risk, but it's important to ask whether they're sustainable in the long run. Next, could trading firms reduce the influence of consulting? Possibly, but it would require a fundamental shift in how these firms operate and value internal expertise. This ties into industry impact, how these dynamics shape the broader financial landscape. Then, a crucial question for educational institutions. How should IIMs redesign their curriculum to better support careers in quantitative finance? This is about aligning academic programs with industry needs, emphasizing practical skills, and fostering innovative thinking. Moving on to individual career choices, should MBA students chase after high salaries or prioritize cultural fit? It's a classic dilemma. While lucrative offers are tempting, a good cultural fit can lead to greater job satisfaction and long-term success. Finally, are these extremely high salaries sustainable over time? That's the key question. The market is always evolving, and what's high today might not be tomorrow. It's essential to consider the longevity and ethical aspects of such compensation. So, these discussion questions are designed to challenge us to think beyond the surface and consider the broader implications. How risks, industry practices, education, personal values, and sustainability all connect in this complex financial ecosystem.